Hi everyone, Stephanie Green here. Today I want to have a talk about self-managed superannuation funds and specifically what the recent government announcements mean to them. Okay, first up, just some general information about this presentation. So the announcements included in this include both federal and state government announcements as of the 3rd of April 2020. This is just based on announcements rather than what's legislated, as we don't have that detail yet, so we are working with some very broad information. The information provided in this presentation is general in nature and does not constitute financial advice. First up, we've got early access to superannuation. So one of the main measures announced by the government impacting super is the ability to access your superannuation early. Prior to these announcements, accessing super before you reached your retirement age or preservation age was next to impossible. There were a lot of hoops to jump through and only a very limited set of circumstances would allow it. Now eligible individuals can access up to $10,000 of their super before 1 July 2020 and a further $10,000 post 1 July 2020. We don't have the details on how far post 1 July 2020 this will be available, so at the moment we are assuming it will be for a few months. To be eligible to access your super through this method, you need to be unemployed, or eligible to receive income support payments, or on or after 1st of January 2020, you were made redundant, your hours were reduced by 20% or more, or if you were a sole trader, your business was suspended or you had a reduction in your turnover of 20% or more. You will be able to apply to access your super early through this method from mid-April 2020. We don't yet have specific dates, but we will keep you posted once we have heard further. Applications need to be made directly to the ATO via MyGov. The money released from your super fund will not be subject to tax, and it will not impact your Centrelink or Veteran Affairs payments. Another measure announced by the government is the reduction of the minimum pension drawdown requirements. These rates, which represent the amount you are required to draw down from your pension account each financial year, have been reduced by 50% for the 2020 and 2021 financial years. This means, for example, if you were aged 68 and had a pension balance at 1 July 2019 of $500,000, your minimum drawdown amount has gone from $25,000 to $12,500. Now, because of the significant fluctuations in the markets we are experiencing because of the COVID-19 situation, there is some concern that investment strategies may no longer be valid due to holdings falling outside their approved ranges. It is a requirement of self-managed super fund trustees to maintain an up-to-date investment strategy. However, the ATO have advised that the short-term fluctuations caused by the current situation will not affect the validity of your strategy, meaning that you won't need to go out and set a new strategy in place at this point in time. There has been a lot in the news lately around rent relief, specifically for commercial properties. Now, you may be aware that self-managed super funds have the ability to own commercial properties within the fund and lease them onto related parties. However, there are strict rules in place relating to the rent charged and it being at a market rate. So what happens in this instance if your tenant can no longer pay their rent because of a reduction in business due to the COVID-19 situation? The ATO compliance approach for 2020 and 2021 will be not to take any action if a temporary rent reduction occurs. This means that you do have the ability to provide a rent to provide rent relief to your tenant if it's necessary. Current legislation in relation to in-house assets requires that those assets be no more than 5% of your total fund balance. So what happens if, due to the market downturn, these assets subsequently go over that 5% threshold? The ATO have required that a plan be put in place to rectify this by the end of the next financial year. However, once again, their compliance approach will be not to take action if that plan can't be put in place due to the COVID-19 situation. Meaning that if your plan was to rectify this through selling other investments to change your holding percentages, but you cannot do that due to the downturn in asset values, they will not take action. Thank you for watching today. We are offering a 15-minute complimentary phone call to businesses to discuss how the stimulus package may benefit you and how we may help. If you have any other questions, please contact our office on 5623 3778. And if you are struggling with the effects of the coronavirus and need someone to talk to, please seek professional support by contacting Beyond Blue or one of the other support agencies out there. And don't forget, support local when you can. Thank you very much.